This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. Morning, guys.
Morning.
Hi, good morning. So yesterday's Rakhi celebrations done, and today it's a penultimate day. Tomorrow's the weekend.
Well, tomorrow's Friday. Right?
Tomorrow's the
Friday,
the last day.
Yeah. No, I was so lost in the Rakhi celebrations. I was saying I'm looking forward to the salary today.
Lots of things to look forward to then,
Absolutely.
perhaps.
Well, did you guys see
to?
the moon yesterday, by the way? Yesterday evening?
I
mean,
missed
it was a blue moon. It was not blue. I mean, I was like, but it was big. It was closer to the Earth than I think it'll be this year. And apparently there was Saturn, which you could spot next to it as well. I've been asking people whether did anybody spot Saturn, but you need a small telescope for it.
Apparently, because of the blue moon, the moods. There's a lot of fluctuation that happens in moods, and so beware.
Is there a warning?
Well, you guys beware, since I am the one who
saw the moon.
Okay, well, let's just quickly take a look at the trade setup, right? I mean, how are things looking? For the market, for almost 3 days now, it's been neither here nor there. It's flattish, and yesterday was no different. Actually, yesterday was two halves, very different. First half was kind of strongish, but the second half, starting about 1:30 p.m., the market sold off, and we ended absolutely flat. On the Nifty, actually on the Bank Nifty, we ended over 0.5% lower. So the underperformance in banks is back again. It was fleeting outperformance for about 4 or 5 days last week, but well, the underperformance there is back. So, but indecisive, flat is what we have. U.S. markets, they had another up day. I mean, actually, for the NASDAQ, it is the 7th day of gains in the last 8. The index was up 0.5%. The S&P was up about 1/3%. Actually, U.S. indices were up a little bit more, but they gave up gains. So we had the second revision to U.S. second quarter GDP numbers, and it was a downward revision. Actually, across growth, inflation estimates within the GDP number, it was a downward kind of revision that we saw. So that kind of sparked a dovish reaction across U.S. assets, but it was short-lived, and that's why the pullback happened later. The 10-year yield actually ended flattish, 1 basis point change, but lower. The dollar index is down another 0.4% nearly to 103.13. So this is, a far cry from the 104-ish, 104.5 kind of levels, which it was knocking on, which is good news. The only niggle is that that oil prices are continuing to move up slowly but steadily, 0.5%, 0.75%, but it's now nearly about $86 a barrel. So one needs to keep an eye out on that. By the way, the sort of, at least since Jackson Hole, the divergence has become even more between what the US is doing and what India is doing. So for the NASDAQ, it's up 4% since the Jackson Hole speech, Powell's speech, and the Nifty is absolutely flat, 0.4%, right? So it's pretty stark. Now, let's just come to the market here in India. The Nifty is, I think we just need to watch and wait and watch for the Nifty to take out the 20-day moving average, which stands at 19,433 now. By the way, yesterday's high was 19,452-ish, which is exactly the 20-day. So it hit the 20-day at some point in the day. Actually, it hit it at around 11:30 in the morning, which was the day's high. And then it did nothing. Starting 1:30, it came off quite sharply, as I mentioned earlier. So the 20-day now has moved a little lower once again to about 19,433, and that's the first level I think one needs to, the Nifty needs to cross and then close above. Support comes in at about 19,210. That's basically, the lows of 3rd of August, I think 14th, and then 16th of August is a downward sloping line. The support line that is 19,210. You can use that as a bit of a support. Well, Bank Nifty has failed to close above its 40-day exponential moving average for 3 days in a row. And yesterday, of course, was a complete failure. So it was a sharply low, not sharply, but it was a meaningfully lower close. Resistance for the Bank Nifty is exactly that, which is the 40-day exponential moving average, which stands at 44,544. And support comes in at the recent low, the 25th of August low, which was a big candle, which is 43,983. So, the market's not giving you any signs that it wants to do anything meaningful. So I think we were saying on Monday that maybe with the Jackson Hole behind, perhaps things are getting a little clearer, but that's not the case. So we just need to clear some of these levels out, and they're not very far away. So better to wait, watch. If you're taking or trading positions, go small. And always, as we've been mentioning, better to take those positions on the long side on dips and not try and look at the opening levels to do anything at all. Mid caps and small caps, of course, I mean, you know, as the line suggests, the party continues. No problems there. Mid cap index 3/4 and small cap index yesterday up about 1.25% or so. And those are individual stocks which come into play. We'll talk more about that. Sonia.
Absolutely, you know, and there was selling in the last 1 hour of trade, right? If you look at it, in the last 1 hour, the Nifty sort of came off. It just goes to show that this continues to be a little bit of a sell-on rally market, and the Nifty failing to hold on to 19,400. That's the crucial level. I mean, we've been watching out for, you know, the 20 DMA, the 50 DMA, all of that around this 19,400 to 19,450 zone, and the Nifty just unable to hold on to those levels. Having said all of that, the gains on Wall Street have been pretty good. It's been 4 straight days of gains now that we've seen. But for our own markets, as we said, it's been so very range-bound. The bigger problem really is in the Bank Nifty. So if you look at what's been happening in this series, right, the Bank Nifty in the last 1 month has lost about 3%. Although yesterday, FIIs sold about 500 crores in the cash markets, while DIIs bought about 1,300 crores. If you look at the series so far, it's been a weak series, right, August. The Nifty is down 300 points, and this is the first negative F&O series that we've seen since March of this year. So the market mood is definitely not as buoyant as it was in the preceding months. A couple of things to watch out for. You have the India Q1 GDP data that comes out at 5:30 p.m. later today. You have the auto sales for August that come out tomorrow. There's also F&O expiry that is today, and then there's US monthly jobs report tomorrow. So we'll be flooded with a lot of data in the next 24 to 48 hours. But in the meantime, you'd have to say that, you know, this level of the 50 DMA, the 20 DMA around 19,400 to 450 is something that continues to be a stiff resistance for the market. Whether we take it out, time will tell. But for now, there doesn't seem to be any trigger which could suggest that.
Well, that's right. So, you know, India's underperformed this week because you have the global markets. You look at the S&P 500 that's risen for 4 straight days. Well, the Indian markets were underperforming, virtually unmoved. And both, if you compare us with the developed markets as well as the Shanghai index, that's the Chinese index, were underperformers for the week. Now, in terms of trade setup, well, today we have F&O expiry that plays out. And Nifty, well, will be breaking that 4 series winning streak. Remember, we had a good streak between April to July. All the series we ended positive. For this series, we're down close to around 300 points. So unlikely that we go up 300 points today. So we'll have to digest that fact. Rollovers, well, on D-1, that's as of yesterday, for today, they're more or less in line. I'm looking at the Nifty rollovers at around 58, 57% approximately. The market-wide rollovers as well at around 76%, more or less in line with what you've seen in the previous 3 sessions. In terms of flows, watch out for the MSCI rebalance. That will take place in the final hour of trade or so. So we'll have cash market volumes that will spike up. You'll have the F&O expiry as well. So the last hour will be quite volatile and individual stocks will be in focus. What did the FIs do yesterday? Well, they added longs as well as shorts. They continue to remain mildly net short. The problem is they're writing calls aggressively. And yesterday they wrote close to around 20 calls for every 1 put. So aggressive writing is what we have seen. And the 19,400 call, that added close to around 30 lakh shares yesterday. The premium came down from around 56 rupees. It came down to around 20 rupees odd. There was a lot of writing out there. But on the downside, that 19,350 put, well, that gives some kind of hope to the bulls. What are the levels we're looking at? Well, since 19,300 put has the highest open interest, on the downside, you're looking at around 19,280 to 19,300. That's a crucial support zone for the day itself. On the upside, 19,450, we went there yesterday, the 20 DMA, tried to cross that, traded above it for some part of the day, and then we slipped from there. So that's clearly a resistance level that we're looking at. The Nifty Bank, that's the problem pocket. Yesterday, it came off big time. The 100 DMA, it's quite close to that, close to 200 points away from that level. So that's one level I'm going to look at. And if that breaks, you're hoping that the 16th August low that we just visited, 43,600 odd, that holds out. So that's clearly the important, support zones. The GIFT Nifty for starters, well, yesterday it was indicating a big gap up. Unfortunately, we came off the day's high. Today as well, it's suggesting a 35-point gap up. But as we know in the last few days, you need to build onto these gap ups because otherwise it gets sold into.
All right, Nigel. So that's basically all of the things that you need to watch out for as we begin another trading session.
By the way, Prashant, since you saw the blue moon, I read up on it. It said it could either bring out deep feelings of love and support, or it could bring out unresolved issues of yours. So
dear.
you decide which one it is.
I think I'd stick with the former. But if the latter comes out, I mean, you guys be understanding today.
We'll keep our distance.
All right, well, before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Harold van der Linde of HSBC will join in to discuss the global setup. Our research team will get you CNBC-TV18 list of top 10 stocks for the day. At 8:30 this morning, we have Deepan Mehta of Elixir Equities talking to us about what he likes and he'd like to do in the market.
Okay, plenty of stock talk and market talk. First up, on the equities front, we have Mahesh Nandurkar of Jefferies, who says that political continuity is the most likely outcome in the upcoming national elections due May 2024, which augurs well for their key thesis of a capex and housing upcycle over the current decade, driving higher GDP growth and attractive market returns. He says the key risk factors would be anti-incumbency, small vote share swings causing a large impact on outcomes, and the 2004 example. He adds, potential market volatility ahead of the election should be used to add domestic cyclicals.
Okay, well, let's get you some money market views now. On the rupee, we have Parul Mittal Sinha Stan C, who says that Forex saw appreciation buys last week, tracking dollar-yuan trends and downward pressure on the USD. For next week, she expects the rupee to trade between 82.5 to 83.1, with MSCI rebalancing related inflows in focus. Adds that non-farm payrolls data on this Friday will be the key driver for USD and yields there.
And on the bonds, Parul Mittal Sinha says domestic yields saw downward pressure last week, tracking global rates. For next week, she expects the Indian benchmark 10-year yield to trade in a range of 7.1 to 7.2 on the basis of the new benchmark. Apart from global rates, the ICRR review on September 8th will also be in focus.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit from now in our special Top 10 segment. But we're looking at Dish TV, BHEL, RVNL, Zen Technologies, Dreamfolk Services, Nazara Tech, Ajanta Pharma, and a whole host of metal stocks as well. Those are stocks on the positive side. On the flip side, you have Sula Vineyards as well as MedPlus Health that are likely to react to the large trades.
Okay, well, let's get you the first global opinion. Harold van der Linde, head of Asia Equity Strategy at HSBC, is joining us. Harold, great to have you back on the program. Thanks very much. You know, you're bullish on India. You've made that clear in very unambiguous words. Just a quick word, though, Harold. You know, the small cap and the mid cap space is the one which is sort of, a piquing interest for a lot of people. And the way the rally is unfolding there, almost, 0.5% kind of compounding, daily compounding. It's unusual. What can you tell us about that? I mean, and what kind of flows are you seeing there? What kind of interest are you seeing at HSBC and your colleagues at other investment firms?
No, that's really interesting because you're absolutely right. I think one of your colleagues just put on the screen that there's a party going on in a small and mid-cap space in India. And that's absolutely right. And that's much more so than in any of the other markets that we see across the region. And that is really domestic flows. You have, of course, across India, a lot of people who invest in stocks either through mutual funds or your systematic investment funds that they have, or trade themselves. Because the foreigners that I talk to, they don't really go in that space. They look at the top, say, 15, 20, 25 key stocks in India, the large caps, because they come in with large volumes. But there's enormous amount of money flowing around in that part of the market, which I think is really healthy as long as the valuations stay in track, right? But it's healthy because you see that domestic savings are being channeled in domestic investments there. Pretty good. I like it.
Okay. Okay, you like it. That summarizes it, right? You like the Indian markets. But I want to talk about certain pockets because if you look at what's happening with the Bank Nifty, right? The Bank Nifty is now down over 3% in just the last 1 month. As a long-term investor, would you use this as an opportunity to buy some of the large banks? I mean, HDFC Bank has been a big underperformer. Would you jump in there or are you a bit cautious?
I think for the moment on the banks, I'm a little bit cautious. That's where maybe the blue moon, you were talking about the sentiment that comes out in blue moons. And maybe for banks, that's a little bit the case there as well. Why is that the case? Because I think there's better, interesting opportunities in some other parts of the market. I'm thinking about some of the consumer names. I'm thinking also pharma is something that has really surprised through the reporting season in India. So the numbers there have come through. I think that might actually continue for a little bit longer. We like some of the autos sectors, so that's something I would be looking at. The banks for the moment, it's kind of, maybe the blue moon needs to get out of the way first.
Hi, Errol. Good morning. India is the long-term love story, it appears so. But in the near term, do you think that investors would like to have a bit of a fling with the Chinese markets? Because you have action out there from the central banks. You had them cut the stamp duty as well out there. And valuation-wise, well, they're fairly attractive. So in the near term, say in the next 3 to 6 months odd, do you expect China to come back?
Yeah, I think there's a good risk that China could come back. So you're absolutely right, Nigel. India we like for the longer run, but it will be influenced by what happens in the other parts of the region. And what we've seen is that a lot of money has gone into North Asia because that's where Japan was doing very well. That's where artificial intelligence plays were doing very well. That's where that really hovered up a lot of the liquidity across the region. Now, China, I think people are a bit too negative on China. The sentiment is extremely poor. And if you look at the macro indicators, it just doesn't look very good. But keep in mind, a stock market is not an economy, in particular in China. And there are two things that could help China. One is that actually, despite the fact that we've seen so much bad news on the macro side, the earnings numbers in China, and it's still reporting season in China, it's finishing actually today, if I'm not mistaken, is actually coming through pretty good. China is going to grow as fast, if not marginally faster than India this year. So that's one thing. Secondly, China is really sensitive to what happens with global bond yield. Now, you guys were talking about that. But if we see signs that, for example, there is a bit of weakness in the US economy and those bond yields will come up, that also supports the Chinese market. So those two elements, even if they move a little bit in the right direction for China, the fact that sentiment is so poor could really shift the capital flows across the region back into China. And that would be, I would almost see that eventually as an opportunity to buy India. Yes, that would probably mean some of the foreign flows would go into China. That allows China to rally. Let's assume that for the case. But as I mentioned, China of India is the place where you want to be, Indonesia actually as well, over the course of the next couple of years. So I think I would eventually wait then to move back into India, into Indian equities, if such a trade were to occur in the second half of the year.
Harold, will this, what central banks in the West and the Fed, etc., are doing, will that at some point emerge as the dominating driver for flows, etc.? Or you think that's done and dusted? What's your sense?
No, I think we're very close to the peak in interest rates. Of course, if you're a central bank governor in any country, but in particular in the West now, inflation is not done yet. You cannot say that you're going to lower interest rates. It's like if you're a doctor, you will not proclaim your patient to be healthy until you have clear evidence that on all indicators, everything looks good and all his blood tests come out good. And I think that's where we are. They know that they're moving in the right direction, but we haven't got clear evidence signs that we're out of the woods yet. So the talk will still be for, yes, maybe we have to do a little bit more and these sort of things. But eventually, I think as we go into November, December and into next year, the market's going to say, hey, the blood tests that come through look pretty good, actually. We're on a different path here. And I think from the second quarter onwards in 2024, the Fed is talking about low interest rates.
All right, just one quick question before we let you go. The big event upon us in the next 1 year is the national elections, right? The general elections in the month of May. Now, the expectation is that there will be political continuity, and I understand that that's great for the market. But if anti-incumbency does, rise and things change, a new government comes to power, for a long-term investor, would it really make a difference?
I think very often when we look at markets and politicians, we're looking at what sort of plan they have. And I don't think that the plans differ too much. Of course, the approach and the philosophy from which they come from will differ a little bit. It is more about how these decisions are being made. So, for example, as I think I mentioned before months ago, I was in Tamil Nadu. Fantastic food, by the way. I think it's one of the places with really good food in India. But anyway, that's another story. Yes, exactly. Well, although my favorite, and I think it comes from the north, is chola Batura, that's kind of heavy stuff that comes from the north, right? But Tamil Nadu has got some really good cuisine. Anyway, I traveled there, and you go through the paddy fields there, and then suddenly you're on a highway, you drive for a couple of kilometers, then you're off again. So those highways need to continue to be constructed. Whoever sits in Delhi will not change that. So there are these kind of investment programs in place in India that will go on irrespective of who goes on. So I'm not overly worried. I would agree with, I think you just mentioned that we're going to get continuity. I think that's probably the case. On the fringes here and there, of course, different people have different policies. But it's these sort of plans, build out of infrastructure, that will not change. Just like Indian cuisine will not change either, whoever is in power.
You know, you were talking about chola, right? I mean, there's something called batura also, Harold. You can.
Yeah, that's
chola
one of my favorites, actually.
Harold, next time you're in Mumbai, you know, or on behalf of both my uncles, Sonia, Prashant, we're going to take you out for a nice meal, and I'm sure you're going to love it.
Even better if you're all able to go to Delhi. That's the home.
But you do need a stomach of steel, by the way. You need a stomach of steel to digest all of this spicy food. I hope you're okay with that.
Good. I'll hold you to that. Next time I come through, we're going to get some
It's a gift from God.
All right, Harold, appreciate your thoughts here on CNBC TV18 and got us all hungry now. So we're going to go and grab some breakfast. Thanks a lot for joining in on our show this morning.
You know, actually, I was going to ask Harold, you guys were talking about the moon, full moon and all that.
Blue moon.
Blue moon, I mean, yeah, but any favorite moon movies? I mean, full moon, werewolf movies?
No, you know, I was just thinking that he said, oh, banks are down, blame it on the blue moon. Now you can blame everything on the blue moon, you know. Your portfolio's down, blame it on the blue moon.
I was just thinking, there was a movie called Junoon. Do you guys remember it? Okay. Rahul Roy came out in the 90s, early 90s. I still
get nightmares thinking about that movie. Thanks for reminding me,
How did we get to Anyway, a lot of talk about the moon. We'll take a quick commercial break here. We'll come back and we'll talk about the list of stocks to watch out for on the other side. Our research team will get you that coming up in just a bit.
Welcome back to Bazaar Morning Call. Let's go straight to our research team to help us with the list of top 10 stocks as we begin the day. First up, Vivek is joining in. He has a couple of interesting stocks. There's medicines, there's wine, there's a lot of things that he's talking about this morning. Vivek, over to you.
Well, good morning. Like you mentioned, a lot of blogs on the, many companies and a lot of PE exits, and this particular trend continues. We had access to 2 term sheets today morning. So first on our list, Sula of India, according to the term sheet, what we understand is that Furlinvest Asia PT is looking to sell up to 12.6% stake in the company. The total size of the block is close to 540 crore, and the price range for this particular block is between 473 to 508 rupees a share. There's a further lockup of 60 days as far as the further sale of shares is considered. Remember, at the end of the June quarter, this particular entity, Furlinvest, held close to 18.6% stake in the company. Second on our radar is MedPlus Health Services, Lavender Rose Investment, as well as PI Opportunities Fund, that's Premji Invest Opportunities Fund, together are looking to sell close to 8.1% stake in the company. The total size of the block would be in excess of 820 crore, and the base price for this particular block is close to 860 rupees a share. Remember, at the end of the June quarter, PI Opportunities Fund held over 14% stake, and Lavender Rose held over 17% stake.
All right. Thanks very much, Vivek, for that. That's a list of stocks to watch out for. Important blocks, I mean, they're continuing to flow in, and Sula is going to be the big one today. Well, Dish TV and what's happening there. Ritu is here with more details. Ritu, morning.
Good morning, Prashant. The SL Group company's debt, which was about 6,500 crores, was transferred from Yes Bank to JC Flowers ARC, and now the group has entered into a settlement agreement with JC Flowers ARC with regards to this debt, which of course was purchased at a significant discount. But we've been given to understand that the Subhash Chandra-led companies have agreed to repay about 1,500 crore rupees to settle all outstanding dues to JC Flowers over a 7-month period, with 15% having to be paid in the first 30 months and the remaining spread over the next 6 months. But interesting to note that while JC Flowers ARC, as part of the agreement, has agreed to release the security which it holds in proportion to the repayment, and that would be the real estate assets of the group, shares in Z-Learn, etc. But as far as the stake in Dish TV is concerned, which is at 25%, again, that was transferred to the ARC from Yes Bank as part of the larger deal, will not be released until the entire agreed amount of 1,500 crores is repaid in the next 7 months. So positive from a settlement point of view, but in execution remains to be seen, and until that is done, the stake in Dish TV will continue to be held by JC Flowers ARC.
All right. Thanks a lot for that, Ritu. Well, let's go back to Vivek. He's here to tell us about some more stocks that are on the news. Vivek?
Well, that's right. Yesterday, a very important development as far as a very large supercritical thermal power plant is concerned. Remember, during market hours yesterday, NTPC said that they had gone ahead and approved close to 15,530 crore investment for Lara supercritical thermal power project. This particular project is in Chhattisgarh. Now, BHEL is the company that has bagged the order to set up this particular power project, and this is going to be 2 into 800 megawatts thermal power project. While the quantum of the order itself has not been disclosed, Antique today writes that this particular order should be close to 11,000 to 12,000 crore for BHEL, a significant large order as far as BHEL is concerned. Next stock on our radar is RVNL. It's emerged as the lowest bidder for projects worth over 256 crores, and this particular project is for Maharashtra Metro Rail Corporation. And lastly, keep an eye out for Zentech as well. The company has received orders worth 72 crore. This is from the Defense Ministry. Remember, the company provides military training as well as anti-drone solutions.
All right, thanks a lot for that, Vivek. Let's hop across to Surbhi now. She has some more stocks that are in the news this morning. Surbhi, over to you.
Thanks for that. So first on my radar is Dreamfolks. Now the company has collaborated with a leading visa service provider to offer premium lounges access and doorstep visa services. Next is Nazara Tech. There's a board meet on 4th of September to consider a fundraise. And lastly, Ajanta Pharma. The US FDA has given approval for Topiramate, a drug that is used for epilepsy and migraines. The company can launch this drug as per the settlement terms on Feb 1st, 2026 or earlier.
Okay, thanks for that, Surbhi. So those are a list of stocks, but let's find out what's happening in the metal space as well. Manisha Gupta is joining in for that. Manisha, over to you.
Thank you for that, Sonia. Well, it seems like an extended gains continuing in case of the metal prices. There overnight, we've seen 1 to 3% of a jump up coming across board. This is because the September to October, in any case, are traditional strong demand months seen for the metals. The softness in US dollar, the weak economic data, the US GDP expanding less also tells you that an interest rate hike perhaps is not on cards for the month of September from US, and that has been supportive. And the Chinese PMI numbers that just came in have contracted for a 5th straight month, but the contraction has been lesser than previous month and lesser than the street estimate, and that has been supportive as well. China, in any case, has been doing interest rate reductions, special finance bonds, and markets are taking cues from that. Steel, in the meanwhile, is trading at a 3-week high. You have iron ore prices trading at a 1-month high. Copper and aluminum are trading at a 2-week highs right now. So strong support across board.
Thanks a lot for that, Manisha. Well, let's do a quick recap of all the top stocks that we just covered for you. Let's do a quick revision. Stocks with positive news flow, they include Dish TV, BHEL, RVNL, Zen Technologies, Dreamfolk Spaces. You have Nazara Tech, Ajanta Pharma, as well as a whole host of metal stocks that will be reacting to positive news flow. Well, a couple of them will be reacting to negative news flow. They include Sula as well as MedPlus Health. Well, those are the top 10 stocks that we're looking at, but there are some more brokerage notes that have come in. Sonal's been doing all the reading. She joins us to fill us in with a couple of them. Hey, Sonal, morning.
Morning, Nigel. Well, some interesting ones at that. So let me start with the first one, which is on HCL Tech by JP Morgan. They have an underweight rating with a target of 900 rupees per share. But they say that the company believes the worst is over as pipeline is converting into deals and deals are converting to revenues. Prior test points, the likes of ERND, the TMT sector, they have bottomed out now. So there's some positive commentary there. Other verticals should also see improving growth driving over second half of this year versus the first half. And client conversations point to zero cost transformation deals. So yes, there is some positive commentary coming in on HCL Tech and speaks about the IT sector as well. HSBC has written an Astrodem where they have downgraded the stock to hold rating, target at 337 rupees a share. Revenue growth remains strong according to them, and margin in mature hospitals has improved on a YY basis. Pending restructuring is a positive, but uncertainties around deal dynamics remain, and that is something which is making them a little uncomfortable. Jefferies is written on the cement sector where they say the demand is likely to clock double-digit growth in FY24. This is for the second straight year. Growth appears to be driven across all the segments in the sectors as well. Strong capex and the housing upcycle that we are seeing in the current decade will continue to be the growth drivers for the sector. Taking precedence from history, a sustained price war appears unlikely according to Jefferies. They have preference for the large cap names in the sector.
Okay, Sonal, thanks a lot for that. So those are a whole host of brokerage views. Let's take a short break. On the other side, Dipan Mehta of Elixir Equities will be joining in for some fundamental stock analysis. We'll also have Ashank Desai of Mastech to talk about the deal momentum and their business outlook going forward. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. Well, for starters, the gift nifty suggesting we open up in the green, but we saw what happened yesterday. Intraday, the bulls get a little bit nervous, and remember today we have expiry as well. That will play out. That's about the index, but plenty of stocks to discuss. So to help us out with that, Deepan Mehta, Director Elixir Equities, joins us on the show. Hi, Deepan. Good morning. Thanks so much for joining in. Well, Deepan, clearly the Nifty Bank, has been the index that's been dragging. And if I'm just looking at it in the last 1 month or so, the Nifty will be down close to around 1%, The problem is banking names. And SBI is down close to around 8.5% odd. Do you view this as a bit of a buying opportunity, buy into these banking names? Or do you think you'd rather wait by?
Good morning, Nigel, and thank you for having me on your show. I think the issue with banking stocks is over-ownership. And of course, banks have almost 35%, around about 35% weightage in the sensex and nifty. And because of that, a lot of investors who are benchmarked to the sensex nifty also have a large holding in banks per se. And my sense is that a lot of investor portfolios are also overweight when it comes to banks. So although the stock prices have corrected and on a fundamental basis, it's a good entry opportunity in most good quality banks. The issue is that the proportion in the portfolio shouldn't go haywire. So I think if an investor is underweight bank, then I think it's a great opportunity which they must grab with both hands and enter into good quality banks. And there's so much of choice when it comes to banks, right from large cap private sector banks to PSU banks, and there are some high growth mid cap banks as well. So I think a decision to buy into the banking sector really depends upon what proportion of banks you're already holding in your portfolio.
This space that has come back in a big way, Deepan, is capital goods, right? I mean, L&T is one of the big movers this year. I was looking at the chart of BHEL. In the last 6 months, BHEL has gained 70% already. And there's some new order wins, for supercritical thermal power projects that BHEL has won as well. Do you think it's too late to jump in here, or is there more to go?
See, Sonia, I think that maybe the stock price has run up a bit, but there's no denying that the fundamentals at BHEL certainly have improved. As per the AGM, I think chairman's speech, they're sitting on 1 lakh crores worth of orders. That's about 4 times their revenues for FY23, which is quite impressive in terms of earning visibility. And hopefully, I think we'll see improvement in operating profit margins as well. So from a fundamental perspective, I think next 3-4 years are going to be great for BHEL, and this entire capex cycle, if you go back historically, typically lasts for 7-8 years as well before it starts to fizzle out. So for the entire sector, I think next few years will be excellent, and BHEL also I think should report excellent numbers going ahead or so. But the fact that the stock has run up the way it has, and that's true for a lot of capital goods, I just want to have a wait and watch approach at this point of time and buy at a correction when trading is a little bit subdued and stock prices have corrected by 10-15% or so. And that will provide just a little bit amount of margin of safety. And actually, that's true for a whole host of stocks. When you look at the entire spectrum of stocks, the one thing which comes to mind is just wait and see where this particular rally ends, because there could be a correction down the corner. And a lot of stocks, I think, are mildly on the, I would say, on the overpriced zone at this point of time.
No, but just amazing, right? Deepan, hi, morning. Gokuldas is from under 700 now is almost up to 900, 2 days flat. Any thoughts there?
Yeah, good morning, Prashant. This is the same thing. I think we've seen a run up in so many stocks, be it on positive news flow or on account of catching up and removing the underperformance they had for the past several years, or could be reporting of good numbers, industry doing well, acquisition in the case of Gokuldas. But when you look at the actual earnings per share and the price to earnings or the price to book ratio, a lot of these companies are trading at rich valuations. And of course, I think earnings will catch up and the next 2-3 years will be exceptionally good. But at this point of time, I think stocks have run a little bit ahead of what the street earnings estimates are. And from that point of view, I just want to, put a hold on all of these stocks. I wouldn't recommend selling them because, these are great long-term stories, and, buying into them in itself, I think, require a lot of, research and conviction, which is now there in place. So from that perspective, I think if you're holding a stock like Gokuldas Exports or BHEL or any of the other good quality names which have done well, you can remain invested and maybe enjoy a little bit of upside and be mentally prepared for a correction as well. But from a fresh investing perspective, I think it's better to just wait and watch, have that compression of P multiple of even 3-4 times or so, and that I think will provide some amount of margin of safety.
All right, Deepan, I want your view on a couple of these metal stocks. You've not been very positive on them, but let's discuss a couple of them. Investec, they have come out with the note. They highlight that, yes, Jindal Stainless is up 240% in the last 1 year or so. But they make this point that it's not a commodity, It's a converter rather. They already had a buy rating, but now in fact they've gone ahead and increased their target price to 510 rupees from around 410 earlier. The key reason out there is they increase the multiple from around 5 times EV per EBITDA. They made it 6.5 times. What are they factoring in? Spreads at around 20,000 to 23,000 rupees per ton. They're also factoring in JUSL, the EBITDA out there, moving to around 800 crores to around 1,200 crores in the next 2 years or so. Why are they impressed? The simplified group structure, the corporate structure there, the merger. They've also highlighted the capital allocation, whether it's a brownfield optionality or even the downstream assets. The focus is on better ROC and better spread, so they like that. And the product mix has been improving as well. Finally, they go on to say that by 2025, they're expecting the company to become a net cash company. So put all these factors together, Investec fairly positive on Jindal Stainless. Deepan, I know your view of on metals. You're not being too impressed out there. But Investec, they are pitching this where it's not a commodity, it's a converter. For you, is it the same thing? Or would you give it a second look?
Call it whichever way, it's a commodity stock. And nothing wrong in it. I think, the way they presented the case, I think looks very attractive. And at this point of time, when we are looking for stocks which have low price to earnings multiple, I think Jindal Stainless and a whole host of steel and other metal companies certainly fit that criteria. So yes, I think, you could have a small exposure to metal companies from time to time. You get fantastic trading rallies in it. But, if your mindset is to go for long-term investing and you have an overview of 3 to 5 years time horizon, then I think there are a lot of stocks. I know that right now maybe not the best time to buy, but there are many businesses, interesting companies, new listings, new investment themes opening up, which one should try and pursue. From an investor's perspective, there are only so many investment themes and stocks that one can track. And if you want to do steel as well as you want to do a company like Zomato and pharmaceuticals and software, then it does get a bit confusing. So from that point of view, we try to avoid all commodity stocks and narrow our list. And no doubt, I think there is some investment opportunity in commodities as well. But you need to have a special edge in terms of understanding those industries far better.
That's very well put. Can't do everything, right? So stay focused, otherwise you lose your head. Deepan, Shakti pumps, I just wanted your thoughts. Again, I'm sort of going outside the syllabus in that sense, but 20% yesterday, it's again not underperformed, but it's the earlier high was made in 2021. Before that, basically, it topped out in 2018 with the small cap, mid cap market, then topped out in October 2021 along with the mid cap, small cap top. And is back at those levels now. Yesterday there was news that the Haryana government has given them an order. There is a government scheme called Kusum 3. So solar pumps, they've received about an order worth about 350 odd crores or so. And many are betting that this is the start of many which will come. Any thoughts?
Yeah, you're right. I think it's at a very interesting juncture. And if my memory serves me right, I think that, in the seasons when there's a bit of a drought as we are seeing just now, governments, the agriculture sector, farmers tend to spend a little bit more on irrigation, especially localized irrigation, which is where I think Shakti Pumps comes into play. Their products have been extremely well received, and they are, all the state governments they have worked with in terms of getting subsidy and in terms of providing pumps. So maybe next 2-3 years could be interesting for Shakti Pumps as well. But again, as I said, stocks have run up, valuations on the higher side, so keep that in mind.
We're going to have a discussion lined up with an IT company in just a while. And what we've noticed is that a lot of these companies, right, mid-cap IT, large cap, they have risen about 10, 15, 20% from their lows. Mastic, for example, is at a fresh 52-week high right now, and the stock is up almost 15% in August alone. This is a space you've tracked very closely. You've had a love-hate relationship with the IT space for many years now. But which side of the fence are you on now?
I'm on the side of mid-cap IT. And we want to go for companies which have specialized domain expertise. I don't think Mastek falls in that category, but companies like Persistent System, Tata Elxsi, KPIT, I think these are the ones which have solid presence in certain verticals where they can compete with the larger companies as well and yet provide better talent to the customers. And a lot of the mid-cap companies, if you see, their growth rates have been far superior than large-cap IT. And that clearly shows that the Fortune 500 companies don't mind working with tier 2 software companies as well because they provide value to them. And I think this trend will continue for maybe several more years or so because large cap IT, the base effect also comes into play. So from that point of view, my approach to IT is to be extremely selective.
Okay, be extremely selective in the IT space. But you know, some of these companies like Mastech, right? I mean, they've talked about the deal momentum being very solid at the moment. I mean, and perhaps that's one of the reasons why the stock has outperformed as well. If you own these stocks, do you take profits or do you just let it run?
Yeah, I think, Sonia, from a valuation perspective, a lot of IT companies are still available at reasonable valuations if you compare to what their expected growth rates could be. And you're right when you say that the deal momentum is good for mid-cap IT companies, because typically even 30, 40, $50 million type of deals can make a huge difference to mid-cap IT companies like a Mastech, considering their actual revenue position at this point of time. But that doesn't work for large-cap IT, which is one of the reasons why we want to keep on searching for new ideas within mid-cap IT. And, I don't know, maybe Mastech also may turn out to be an interesting one. I know it's trading at reasonable valuations. And when looking for good quality, cheap stocks, then certainly mid-cap IT can fit that criteria. But I mean, it's just a process. And as I said, I think you need to be selective. The issue with Mastech has been a high degree of volatility in their earnings as well in the past. And they've been around for a really long time. And I think to an extent, they may have missed a few buses as well if you go back to a 10, 20-year history of Mastech.
Got it. In fact, we have the management joining in, so I'll invite you to listen in, Dipan, and then give us your thoughts. As we were telling you earlier, the stock has surged 33% this year so far, and in August itself, it's up 13%. Ashank Desai, the Vice Chairman and Managing Director, joins us now to discuss their business momentum. Ashank, thanks a lot for joining in. You know, in your own words, you've said that the deal momentum has been very strong, and that will lead to a good Q2. When you talk about the Q2 performance, what kind of growth are you looking at, and any more color that you can give us on the deals that you've won so far?
Yeah, so good morning, Sonia and Prashant. See, basically, as we generally don't give any specific guidance quarter by quarter, it will be difficult to basically say how much is the growth going to be. But we are on track with what we had committed in terms of growing faster than the industry generally on year-on-year basis. And the deal flow seems to be, in fact, improved in this quarter over last quarter. So what's really happening is we have been telling all of you that the deal finalization is slowing down over last few quarters. This is the first quarter where we are seeing there is some improvement in that. When I mean by improvement, little bit faster closing of the deals are happening compared to last few quarters. Deals are still slowing down. Slowing down of the decision is still there. However, there is positive movement in terms of reduction, in terms of wait time. So that's the positive side we are seeing, and some of it is resulting into the deals that we are booking. So we are very comfortable.
Sure, got it. That's actually a revelation that deal momentum is picking up compared to what you saw in the preceding 2 quarters. Does that mean that this revenue growth that you saw in the last quarter, about 2.5% constant currency growth, do you think you can do better in Q2 and Q3?
See, the whole issue of orders that are booked this quarter has implication not only in this quarter, but next 2 or 3 quarters. So obviously, if we do well this quarter, that would obviously impact future quarters, yes.
Mr. Desai, good morning, Prashant here. You'd said that pricing pressure in deals is intense. I remember, you'd said that. You said you were seeing competition from places which you were not there earlier. Is that still correct, even though deal finalization is faster, but is pricing still under pressure?
Yes, pricing is still under pressure because everyone is looking at a mix of doing the discretionary project as well as improving the efficiency in terms of cost. Obviously, that translates into the pressure on the deal pricing. But the positive side of it is many of our customers are now saying, yes, we want to reduce the cost. Can you take as much offshore as possible? What we were trying to do on-site. Where customers were saying, no, I want on-site. Now they are more open to offshore, which means some of it work will come here, and that has a larger impact in terms of longer-term stickiness of business as well as overall profitability. But yes, to speak this quarter, that continues.
All right, Mr. Desai, we're a little short on time, but give us some color on the acquisition that you've done. Biz Analytica, I think the revenues out there were around $14.5 million. How do you see this business, the acquired business, shaping up? I mean, what kind of revenues do you see it goes to in the next couple of years? And also, what's the margin profile out here?
See, we are basically acquiring this company because that kind of puts us into a market segment which is fastest growing today, which is cloud data migration, cloud data strategy, and movement of everything in cloud. And this company has a premier position in that area. So what will happen really is not only we'll get the benefit of their revenue, which is there, but some of our existing customers and the future customers will think this as a positive move because we have a complete offering now for them once we get into through cloud migration of ERP that we have Salesforce, that we have digital transformation, that we have. This completes the story strategically. So we are very bullish in terms of its overall impact on our revenue as we go ahead. And the margin improvements have to be done now because we need to move a lot of work from this company to offshore. And that is the process that we are working on. So you will see margin improvement over the next few quarters, not immediately.
Okay, the UK government departments have been large clients for Mastech in the past. And given that the UK government is not in the best shape, right? The economy is not in a great shape. How is that entire client group shaping up?
See, the dynamics of UK government has to do, yes, to some extent economy matters. However, their movement outside EU is also another vector which has some impact on the applications that we do. So it is a combination of both of these which decides what kind of new applications that they are going to take. So that's one. Second is, although the pressure is on the economy, there are certain departments where there is a work to be done which cannot be postponed. And those are the areas where we work, that we don't see any slowdown. So overall, we have not felt any pressure or pinch, if I may say that. However, we'll have to see as moving ahead how the thing pans out.
Absolutely. But the margin, I think Mr. Sunak is doing all the right things, right, Mr. Desai?
Yes.
Thank you very much.
We are hoping that he will do all right things so that government also feels good to digitize the economy. And that pressure is still there on all governments. And that's the positive sign that we feel. And we get into a lot of platform kind of associations with the government, which is happening. And that, combined with our completion of the portfolio through data acquisition, feels us very good.
Okay. Mr. Desai, we'll leave it there, sir. Next time, longer chat, I promise. Thank you very much for joining us and hope to see you live on camera instead of on the phone. But thank you very much for your time. Well, let's hop across to Anuj, who's here to tell us how he's looking at the entire trade setup. Anuj, 3 days now. I mean, we're knocking at these levels, but just kind of we constantly climb down from those. Go on.
Absolutely. Prashant, good morning. The bigger question in market is always what to do and instead of why it happened. And yesterday, again, it just showed you the importance of 19,452, the level that we discussed. And we fell exactly from the dot 19,452, the 20-day moving average. Today's key level to watch is now on the downside, 19,229. What's that? That's the series low. It's trended lower, the series. Normally, trending lower series ended the lowest point. So it's possible that you test 19,229 today. But there's no positional trade on Nifty or Bank Nifty. They're not doing much. Trades intraday, and that too on boundaries. The contra trades on boundaries. You have to sell in rising market. You have to buy in collapsing market if you can do that. Otherwise, focus on individual stocks which are giving you better trending opportunities. At some point, of course, either the Nifty catches up or the mid cap start to fall. One of the two should happen. Let's see if that happens in September series. Just to corroborate that point further, look at what the market has done this series. The Nifty is down 1.6%. In comparison, the mid cap is up 5.2%. And the other pair trade which has played out beautifully this month is the Nifty Bank versus Nifty IT. Nifty Bank is down 3.2%. Nifty IT is up 4.6%. Nifty IT, by the way, is headed towards 52-week high. Absolutely no doubt about that. There's an 8% gap which has happened between Nifty IT and Nifty Bank. For today's cues, I'm watching out for 19,400 call, which has the highest open interest of 1.6 crores with a premium of about 19 rupees. So that gives you roughly a resistance of about 19,419. On the put side, 19,300 put has the highest open interest, and that's where the premium is 25 rupees. So I think the writers assume that 19,275 should be a safe mark. And yesterday, even in a collapsing market, the put writers managed to hold their fort. So that's really your level to watch. I think the problem for the market has been Bank Nifty, and that's where it's consistently failing at the 50-day moving average. And now even the 20-day moving average comes into play. So 44,768 and 44,400 on the upside. And on the downside, the support comes in at 44,200 to begin with, and the 100-day moving average, which is placed somewhere around the 44,000 mark.
Okay, thanks a lot for that. There's a reason, right, why the Nifty IT index is doing that well. I mean, just Mastech just told us that deal finalizations have improved substantially and faster closing of deals compared to what we've seen earlier. Thanks, Anuj, for joining in. Let's take a quick break. On the other side, Mitesh Thakkar and Sudarshan Sukhani will join in for technical trades. Stay tuned.
Okay, welcome back. There's 6 minutes to go for the pre-open session. Let's just quickly run you through what you need to know in terms of actionables, right? I mean, that's what at the end of the day matters. Mitesh is with us, Sudarshan is with us to help us exactly with that. Gentlemen, good morning. Great to have both of you here. Mitesh, you go first. Is there something to do on the index? And we'll come to stocks a little later. Go on.
So, Prashant, on the index, I've been maintaining that the markets will be ranged and contracting. I think that movement is still on. And yesterday there was some sign of, Nifty getting traction on the upside on the intraday charts. But as we started trading below 19,400, I think that hope was also diminished. So for the time being, assume that 19,200, 19,450 remains the smaller range. And on the bigger side, it's 19,200 to about 19,650, 680 on the upside. So it's a contracting market. I would not be very interested to trade the index.
Okay, Sudarshan Sukhani is also with us. Sudarshan, any thoughts on how to approach the market? It's been fairly range bound. Any reason for this range to move either way?
Yeah, good morning. As far as till now, there is no reason. We thought 19,300 will act as support, and it did so. But then the highs were not maintained, and the markets did not retain any strength. So we have some kind of support, but absolutely no inkling of the fact that the market wants to go higher. In such a scenario, and remember today is also monthly FNO expiry, so taking the fact that there is no clarity on trend and there may be choppiness due to the expiry, today is a day of no trading, and that applies to the Nifty Bank. Nifty Bank also failed to hold highs and went much deeper in the red. Do not trade. I mean, I'm talking about myself. I'm not looking to trade anything today for the reasons I just gave.
Okay, all right, gentlemen. Thanks for your calls on the index. For the time being, though, we request you to stay with us. We'll slip into a short break. You come back. we'll get the top picks from our tech guests. We'll also get you pre-opened rates, and we'll be joined by Mr. Subhadeep Mitra, who is the Executive Director, Nuvama Institutional Equities. He'll be joining in to discuss the big themes from the past space, particularly the big win for BHAL from NTPC. You stay with us.
All right, let's go straight to our technical guests, back again with them to talk about individual stocks. Sudarshan, before the break, of course, we spoke about the index, but on individual names, what are you looking at this morning?
I don't have many individual names, and the reasons I explained is that the Nifty is not giving any clarity. With whatever we have, BPCL is an intraday short. The stock had a small rally. That rally fizzled out. It's in a downtrend. Short, intraday short with a stop above 355. Dixon is a buy. You've already been talking about mid-cap IT, and I think that's what it reflects. It's a buy. It's in a narrow range after a big rally. Expected breakout on the upside. Buy with a stop under 4,800. And Lupin from the pharma pack is a buying opportunity. Many pharma companies are giving the same pattern. Big rallies, consolidation. This is also doing that. Buy with a stop under 1,050. That's it.
Oh, all right. Thanks for that, Sudarshan. Mitesh, coming across to you as well. What trades do you have for us?
Yeah. So on the trading side, I have Nigel mix of buys and sells. Or buy on Eicher Motors, which I would recommend buying with a stop below 33.75 for a target of around 34.80. And a buy on Indian Hotels with a stop at 408 for targets of 440. Disclaimer, we have some futures position over here, so there is clearly vested interest. Also buy on Maruti with a stop at 9,700 for a test of around 10,000 levels, and one sell call that's on IOC. Keep a stop at 91.8 here. Look for targets of 88.25.
Okay, all right. Thanks a lot for that. Mitesh, well, let's get you some more trading ideas then. Chandan Tapadia, derivative and technical analyst at Motilal Oswal Financial Services, joins us on the show. Hi, Chandan. Good morning. How do you expect expiry to play out, and also run us through your picks for the day?
Good morning, Nigel. So we have seen some sort of consolidative or kept upside kind of series. In this, Nifty is down, Bank Nifty is also down, but Bank Nifty comparatively underperformed. We have seen call writing activity in both the indices. Let's see how the rollover pan out, but as of now, it seems some sort of consolidation could continue over the next 1-2 weeks in the market. But the best part is stock-specific action is clearly visible in the market. Talking about Nifty, 19,200 could act as a major level, but upside call writing at 19,500 is likely to give the kept upside to the market. Similarly, in the Bank Nifty, downside is opening till 43,500 over the next series. But for day point of view, we need to look at the put writing activity of 44,000 strikes. Looking at the stock wise, we are positive on the selective auto stocks, and most of the auto stocks are doing well. As per the seasonality theory, we have seen a couple of auto stocks have delivered good momentum in the month of September. And here I like TVS Motor. The stock has given a consolidation breakout of last 24 trading session. It has given a decisive close and hold above 1,400 marks. Good activities and delivery volume is also visible with better long rollover, which indicate momentum could continue. So recommending to buy on TVS Motor with a stop loss of 1385, and the stock has potential to move towards 1475 marks. Apart from that, TVS Deepak Nitrite looks good. We have seen good recovery in most of the chemical fertilizer name in last couple of days, and the entire sector was beaten down. So some short covering was seen in most of these names, and we like Deepak Nitrite looking at its price and data studies. So technically, we have seen short covering. Rollovers are reducing with some short covering activity, and looking at some put writing activity in counter as well. Even the seasonality concept also indicate the positive setup in the September month. So recommending to buy Deepak Nitrite looking for 4-5% momentum on immediate basis. So one can buy with support of 2170. Stock can head towards 2300 to 2320 kind of level. Last trading area, there is buy on BHEL, BHEL. A good price setup, high top, high bottom, put writing is visible. Long rollover indicate momentum could continue. One can buy with support of 115, and stock can head towards 125 levels.
Okay. All right. Chandan, thanks very much for that. Actually, we'll go across to Vivek exactly on the last name that you mentioned, which is BHEL. That's basically on the stock board. Vivek, tell us more.
Well, absolutely. Even yesterday during this time, we had mentioned BHEL and, the slew of order wins that the company was receiving. And yesterday, the company has received a very large order win. Remember, the stock is up almost 97% in the last 1 year. In just the last 2 weeks, the company has received 3 orders which are worth over 17,000 crore. The first order is from NTPC that we spoke about earlier. This is for 1.6 gigawatt thermal supercritical factory that the company would be setting up in Lara in Chhattisgarh. And the likely size of the order, as per Antique, is in the range of 11 to 12,000 crore rupees. Remember, in FY24, the company has already booked orders of over 35,000 crore. And that the order book at the end of Q1, barring these orders, was well in excess of 1 lakh crore. The second order that the company received was for NHPC. The value of the order was over 2,200 crore and also received an order in excess of 4,000 crore. Now, this is for Mahan Thermal Power Project. Now, what is in the pipeline going forward? Remember, BHEL still receives close to 85% from its business from the power sector as per Nuvama. And Nuvama states that there is still potential order flows from NTPC to the tune of 4 to 5 gigawatt that is still yet to come out. And the other one is both, NLC India, Naval Lignite, as well as Coal India. Both of them have outlined plans. So BHEL still stands to garner a few orders from these companies as well.
Okay, in fact, thanks for giving us that cue, because we have Subhadeep Mitra, the Executive Director of Nuvama Institutional Equities, who joins us now to discuss more on these order wins and, the kind of revival that we've seen in the thermal power story, right? The kind of orders that are coming through, this NTPC order for BHEL as well. Thanks a lot, Subhadeep, for joining in. The only problem is that the stock has rallied a whole lot. I mean, we were discussing it a while back. It's been, a 50-60% rally in the last 12 months. For BHEL particularly. In case someone has missed out on this rally, is there more to go? And fundamentally, how are you looking at it? NTPC and BHEL both.
Good morning, and thank you for having me on the show. So I think the way the power story is panning out is that from a power surplus scenario is what we have seen, let's say, over the last 5 to 7 years, which is the reason we haven't really added as a nation too much of thermal capacity. And that was reflecting in the exchange prices being, at bottom levels of 2.5, 3. Now, if I take the exchange prices as a barometer of power deficit, I think it's clearly showing where we are headed, right? So from a power surplus scenario, we seem to be headed more towards a power deficit scenario. I believe we hit about a 233 gigawatt of peak demand just about a day back. And the deficit story is now slowly panning out. Right now, it's more of peak deficits sporadically coming during peak seasons or certain days of the year. But if we do not add ample capacity, be it on the renewable side or on the thermal side, effectively in the next 2 to 3 years, we could be headed for, very steep deficits. And I think that is the scenario that the government has already taken into consideration. You already have the National Electricity Plan, which the CE has come out with just about a few months back. It clearly outlines that there are large capacity additions that are being planned. So while on the renewable side, the headline number is maybe 40 to 50 gigawatt of renewable capacity addition every year, on the thermal side as well, the number could be anywhere between 5 to 7 gigawatt of fresh tendering. That is already planned. I think there is a 24 gigawatt tendering number of fresh thermal capacities that's already been listed out in the NEP. My understanding is there is an upside to this number, given that the renewable story is still to pick up and reach that 50 gigawatt per annum kind of number. So we may get there probably over the next couple of years. But given that there is a slow start and deficit seems to be staring us in the face, I think the thermal story is coming back.
Subhadeep, hi, morning. So 30 odd renewable for renewable every year, right?
Yeah.
And on the thermal side, over the next few years, I mean, annually, what should we expect? You said
annually the number should be somewhere between 5 and 7 gigawatt of fresh tendering.
Okay, of fresh tendering. The announcement yesterday, is that coming after a long time? I mean, for a very large project. When is the last time we heard something like that?
I think the last time we would have heard. So you had one more order that had come in last year from NTPC. And right now, what we understand from NTPC also is NTPC is looking at ordering out anywhere between 5 to 6 gigawatts of incremental thermal orders, which includes this 1.6 that has come in now. So I think incrementally another 4.5 gigawatt of thermal ordering from NTPC alone could be expected in the next few months. And then there are talks about, Naval Lignite or Coal India all of these companies also have their own plans of adding maybe 1.5 to 2 gigawatts each. So if I look at maybe the next 12-month scenario, you could see an ordering pipeline that is close to 10 gigawatts.
So when you look at stocks, should one look at utilities, which will order these out to be built? I mean, these new capacities, or should we look at suppliers?
I think you should look at both. So which is the reason, I mean, we have a buy on both NTPC and BHEL. BHEL clearly from the perspective that the thermal revival story is going to lead to almost like a resurrection for this particular company, because 80-85% of the business still comes from power for BHEL. And that seems to be making a comeback.
Sure.
Right?
For
And
NTPC,
NTPC, yeah.
Sorry, I just had one more question on NTPC. I agree, on the business potential, the order wins, etc. But in NTPC, there's another trigger, right, which could be the renewables business IPO or even a potential stake sale. And that is something that the street is focusing on as well. Given all of that, with the 35% run-up that we've already seen in the stock in the last 6 months, do you think there's more to go?
You're absolutely right. I think where NTPC is concerned, it's finally now that the stock is trading at the fair value for only the thermal piece, which is doing fairly well. Now on the renewable side of the business, notably this is the largest renewable company in India in terms of pipeline, right? They have a 20 gigawatt pipeline that's already in place in terms of signed PPAs, tie-ups, etc., which should see the light of the day over the next 2 to 3 years, and it's growing every year. Now, this entire piece, just like what we had seen for the Tata Power in terms of, value creation from the investment or the divestment in the renewable platform, NTPC platform, the divestment is expected again over the next, let's say, 12 to 18 months, and that can be a big value unlock.
Got it.
Just apart from NTPC and BHEL, any other stocks in your coverage universe where there are positive triggers and there's both valuation and growth upside?
So in terms of, so while we've talked about generation, we've talked about, the BTG side of the story in BHEL, I think transmission is the next big piece, right? So if there is so much of power capacity that's going to get added, it needs to flow through transmission lines. And we are again hearing of large capex that's happening on the transmission side of the story, 2.5 lakh crores of capex spread over the next 5 years. So we would peg, something like a KEC on the EPC side, where we are fairly positive, largely because they have roughly 40% of the business coming from India transmission, which at peak used to be close to 80%. And I think that's a directional story that's going to play out over there. There's a margin recovery story also that's on the anvil in that particular stock. Barring that, I would say, I think again on the transmission or even the railway supply side in terms of equipment, I think Siemens and Hitachi are the other two names that we remain positive on.
You don't track Suzlon or intend to start covering Suzlon, Subhadeep, do you?
We don't have that name under coverage as yet.
Okay. Do you plan to? I mean, it used to be a big player on the wind side. For wind, I think it's about 10 gigawatt a year, the plan.
Right. So I think directionally, if I have to look at it, so while I do not cover Suzlon as of yet, I think directionally what you're looking at is clearly just like what you're seeing on the thermal side. And I said that, there is a story panning out on the renewable piece as well. So yes, wind is a big piece out there. 8 to 10 gigawatt of annual, ordering on wind is planned. And as of now, it seems like Suzlon is clearly one of the more dominant players. But as you would, well know, there are more players coming into the business. I mean, we've heard of Reliance coming in with their own manufacturing on the wind side. So I think the next 2 to 3 years should be positive, for most wind players.
Okay, thanks a lot for that. Well, we leave it at that. We have the markets that are going to open in just about 3-4 minutes. So appreciate your time here. Let's go across to Mitesh now to get the big call at 9:10. Mitesh, over to you.
Yeah, I'll go with a buy on Indian Hotels. Disclaimer, I have some futures position over here. I think that's heading towards 440 levels.
Okay, thanks for that. Well, that's a buy on Indian Hotels. Big mover there. Abhishek is joining in to tell us that Momentumizer stock of the day as well. Abhishek.
Well, Sonia, RBL Bank is on my radar with respect to Momentumizer of the day. The stock has outperformed Nifty and Bank Nifty over the last 1 week as well as the last 1 month. So on a weekly basis, the stock is up 8.5%, while you are seeing a decline of 0.5% both for Nifty as well as Bank Nifty. On a monthly basis, the stock is up 5.5%, which compares to a decline of more than 2% for Nifty and more than 3% for Bank Nifty. Volume data suggests they had yesterday's volume, which was at 4-day high, and perhaps the the second highest in last 10 days or even more. Monday's delivery volume was about 33.3%. In terms of stock price and technical levels, the stock is just 4% away from its 52-week high, and yesterday it came out of F&O ban as well. Back to you.
Okay, thanks a lot for that. Just very quickly, let me take a look at what Maruti is doing, because there is some positive development over there. JP Morgan has come out with a report where they've put Maruti on a positive catalyst watch, and they have a neutral rating on the stock. They have a target price of 8,800. But they say that the consensus is now baking in a lot of the optimistic scenarios. The sustenance of market share is something that's that is important to track. Margin improvement is seen against the backdrop of rising discounts and inventory as well. In the very near term, they see the potential for a stock to outperform, and hence they've put it on a positive catalyst watch. Earlier, remember, they were neutral on the stock, but now they're saying that they're looking at some positives there. Channel check suggests that wholesale volume prints should be strong. Market share improvement is looking good. In August, their retail market share was in excess of 43%. And the strong SUV mix is something that can help improve their margins further. So hence, they've put this stock on their list. But just about, I think, less than a minute to go before the markets open for the day. Looks like it's going to be a positive opening. But this is what happens every time. Markets open in the green and then sort of fizzle off through the course of the day, hanging on to this 19,400 odd mark. Couple of stocks, Adani Group stocks are under a bit of pressure. Don't lose sight of that. Adani Enterprises, Adani Ports, all in the red, down about 1 to 2.5%. And the stocks that are gaining from the front are IT names. So Mastic's commentary was important, where they see deal momentum picking up, and that's given a fillip to some of these IT stocks. So there you have it. The first tick on the index in flat terrain. The Nifty holding on to 19,360. The Bank Nifty actually a tad bit in the red. So it's flat, but with a bit of a negative bias going for itself. Let's find out what's dragging the markets. As I said, Adani Group stocks not looking that great. Adani Enterprises and Ports down about 2.5%. Bharti Airtel in the red as well. It's banks yet again. This month, the banks are down over 3%. And that trend continues. So Axis, HDFC, Kotak are all in the red this morning. Apart from that, some steel stocks also not looking great. JSW Steel down about 1%. You have Cipla, Sun Pharma, Eicher Motors also trending in the red this morning. So what's doing well? IT. You have HCL Tech. You have Infosys. There is L&T, which of course has been a big gainer this year. There's TCS, SBI that are hanging on to the green line, and Hindalco is up almost about 1%. Tata Motors as well. Not too bad really. Still one of the biggest gainers this year, up about 60%. So Tata Motors hanging on to that 600 rupee mark. But otherwise, the action once again continues in the broader markets. But, now all Adani Group stocks are under a bit of pressure. So there's Adani Gas, Adani Enterprises, a couple of others as well, down about 2 to 3%. What's happening in the broader market?
Well, on the Adani Group itself, the group has sent out, a release. They're rejecting all of these claims that have come overnight. So, those stocks should be in focus. They're under some pressure, but the Adani Group is rejecting all of these claims. Two stocks that we were looking at on the back of large trades, MedPlus as well as Sula. Both of them at a bit of a discount. Those deals are getting cleared out as it's flashing for you on the screen. So both of them on your radar. On the flip side, Jio Financial Services, it's locked up in upper circuit again. It's up close to around 5% approximately. Remember, it continues to remain in the Nifty because it needs 2 days of not hitting circuit, either on the upside or the downside. And that's not happened. So still, it is giving some kind of support to the index. Suzlon, well, that continues to move from strength to strength. That one, in fact, is up close to around 4.5%. And for this month itself, Suzlon is up close to around 40%. So that's been one of the big outperformers. Uflex had a good session yesterday. It's continuing its good run. It's up close to around 3.5% as we speak. On the downside, a couple of other notable movers are, ACC and Ambuja Cements, both of them belonging to the Adani Group. So both of them are down 1.5% to 2%. And from the frontline names, Hindustan Copper is up close to around 3% odd. Last quarter's numbers weren't great. Valuations not in favor. But the street seems to be thinking that there's a bigger game that will play out here. And maybe, in fact, they'll be able to change their product mix, get some kind of value-added, products coming in there as well. So explains why that stock is up 3%. Prashant.
Okay, those large blocks are going through, right? MedPlus is flashing at the bottom of the screen. Sula, there's that 13% equity has changed hands. The stock's holding. I mean, with that kind of equity hitting via these deals, I mean, the stock's down 3, nothing. MedPlus is down about 5%, a little more, and there also it's a very large transaction which has taken place. Now, let's just take a quick look at a few other names. Geo Financial, I think Nigel did highlight, 5% higher. So, yeah, the low was 200, almost actually 202 or so was the low 2-3 days back. And it's rallied nicely from there. Look at just a few other names, right? Shakti Pumps was locked up in 20% circuit. It's up another 5% this morning. So it's coming up as the 4th largest volume traded stock. So that's pretty large for this time of the day. We have Uflex, which went up sharply. All these packaging companies, Uflex was the top gainer. It's up another 3% this morning. Atul Auto, what a move. I mean, we had the largest investor in Atul Auto, Vijay Kedia, with us earlier this week. From that point, the stocks rallied another 25%. But the rally started before that. The stock is up 70% in August. 70%. So it's been just a one-way kind of a move for that one. We've got MTAR Tech, which is up about 4%. Stocks at about 23.76. MTAR Tech, large volumes in that one. Ajanta Pharma is up about 3.5% right now. What else? Kirloskar Oil Engines is up about 5%, 489 on that one. There is Chennai Petro, which is up 2%. Dream Folks, there was some news flow there earlier. We picked up 3% on that one, 515. Supreme Industries, look at that. Oh boy, almost 4,700 on Supreme Industries. That surprise MSCI inclusion happened not very far back, and it's been an absolutely stellar move. 30% in August. So Supreme Industries has picked up trades at I think about 60-65 times 1 year forward earnings, but no stopping it really at this point in time. And I just want to quickly look at Gokuldas Exports, which did very well, and I think it's seeing a little bit of profit booking. It's down about 4.5%, 828. I mean, almost went to 900 from under 700 in 2 days flat. So there is a little bit of pullback, which is materializing on that side. Apart from that, as Sonia mentioned, some of these Adani Group stocks, not large, they're down 1.5%, at least as we begin today's trading session. Manishi Ray Chaudhary is with us. He's Asian equity strategist, Equity Cash Asia Pacific at BNP Paribas. Manishi, good to have you with us here. Thank you. So, what are the themes that you guys at BNP are working on? We had Harold, who writes the Flying Dutchman column at HSBC earlier with us in the morning, and we were talking about small caps and mid caps, and he was saying, well, large investors that he speaks to are still looking at large caps. I mean, smaller down the market cap, especially the small caps and mid caps, etc., not so much. Is that true in your case at BNP as well? Have you expanded your coverage universe, and what are you really picking up? Go on.
I would tend to agree with that, because large investors who invest very large quantum of money, they would look for liquidity, they would look for size, and that naturally makes them gravitate towards the frontline large cap stocks in most markets. Now, fortunately, over the last 5 to 7 years, that universe of large liquid stocks have considerably expanded in India. If you go back 10 years, possibly at most about 30 to 50 stocks would fit the bill. But today, an average of, let's say, $5 to $10 million of average daily trading volume would pertain to at least about 150 stocks. So that expansion of that universe itself has made the market more attractive. Now, this is, of course, the story in many Asian markets, even in China. But in India, a combination of expansion of the addressable market with significant support from the domestic flows, which makes the market more stable, that has clearly been a very strong tailwind.
Manishi, hi, good morning. How are you feeling about the mid-caps now? Because the rally in the mid-cap index has been steep, but the quality of stocks is a bit questionable at this point in time. Do you think there's a little bit of a euphoria in the mid-cap space that one should be cautious about, or is there more to go on the upside?
Well, I think just like in any category of stocks, not just mid-caps or small caps, one has to be selective. And the investment philosophy should be to try to buy at a reasonable price and at the same time look for growth opportunities and good management quality. If I look at the headline valuations, mid-cap and small caps after this stupendous rally that we have seen, They are trading at at par with the large cap valuations, and in some cases even more. So the headline valuations do give us some degree of what should I say, lack of comfort about that space. And I would think, therefore, that possibly the large cap frontline, well-researched stocks, where there's a degree of knowledge among the analyst and investor community, they provide a degree of comfort at this point of time, which the relatively unknown mid caps and small caps may not.
All right. Hi, Manishi. Good morning. What's really done well in this past month or so is IT. You're talking about the Nifty being range bound. Well, that index itself is up by more than 4%. What's your take on the index? Because there are headwinds up ahead, but it seems one part of the street believes that maybe on data, on software, India is going to continue to outperform, and that's some part where China can't really give us any competition. Your view on the space?
Right. So, you would recall that when I was here on your channel, that was possibly a month ago, and even earlier, I had talked about IT, and we had sounded out that we were actually positive on the sector, despite all the negative data points that had been coming in, particularly around April and May. That was when some of the large cap frontline stocks had given profit warnings. They had talked about slowdown or ramp down in some of their client activity. But we had always held to this point of view that one should be selective in this sector and look for those companies which have a strong deal flow pipeline. And there are quite a few of them. So we actually stick to that point of view. We think that the deal flow in the traditional business, and there are sort of two kinds of deals, where the usual, or the new projects in the Western Hemisphere are possibly going a bit slow right now. But the kind of projects which actually lead to significant cost reduction in, let's say, the banking space or the retail space, they are still very much alive. And that's why we still have IT service stocks in our Asian model portfolio in the India sliver. And we see no reason to get out of those at this point of time.
Right. Got it. Manish, are you watching the the monsoon situation at all? I mean, will that emerge as a risk to consumption? So the latest data says that the monsoon season, which is from the 1st of June, runs till the end of September. But as of now, from the 1st of June, as of yesterday, all India deficit is 9%. 10% qualifies to be called, over 10% qualifies to be called a drought. Of course, I mean, it's the government's it's other factors as well. It doesn't have to be, but over 10% can be. And August has been extremely severe in some states, the deficiency. Maharashtra, for example, I think deficiency in August was almost 60%. So your thoughts in terms of how that kind of plays into the near to medium term. Go on.
This is undoubtedly a near-term concern, as far as the consumer sector and more specifically food price inflation is concerned. But of course, even this monsoon situation has to be triangulated. As we know that June was a small deficit, July was excess, and August has turned out to be quite a significant deficit all over India. And of course, there is a difference across different regions. As we know that, I think there's a deficit in eastern and western part of India. The silver lining here is that much of the sowing actually happens in July. And there was a significant excess rainfall during that period, which would have also led to groundwater availability being at a relatively comfortable level. Now, having said this, I must point out that this is clearly a significant near-term headwind that we are watching out for. We don't think, even if we do have a degree of food price inflation in the fourth quarter or beyond, it would lead to any significant change in the domestic monetary policy. But it is something that clearly has to be looked at as a near-term headwind to the market.
Okay. I had one question on this, consensus buy trade on the capital goods and the power names, right? We were just having a discussion with the power analyst who said that this thermal space is really booming now. Order wins are coming in thick and fast. So the NTPCs, BHELs of the world, are you bullish here? And from a long-term investor perspective, I mean, it hasn't been great for long-term investors in the past 10 years for these sectors. But now do you think things are going to change?
In general, we are positive on industrials. And we think that, yes, power equipment being an integral part of that would also benefit. But one has to be careful about the receivables of some of these companies. Many of them deal with, government orders in a big way. But if you look at the Indian earnings estimate environment, it has actually increased over the last 1 and 3 months. And one important contributor to that has been the industrial sector. Now, within industrials, there are 2 or 3 areas that we tend to focus on. One, infrastructure, where government infrastructure investments are increasing and shall continue to increase, we believe. Second, defense equipment, and that's clearly one area which has been growing and possibly holds furthermore hope for the future. So this is in a sense what we're trying to focus on. I mean, no doubt industrials are a great space right now. We think there's a private capex cycle likely to ensue maybe 6 months to a year down the line. But again, one has to be selective about focusing on the right segment within industrials and getting the stocks at the right growth-adjusted valuations.
All right, Manish, thanks so much for stopping by and filling us in with all of those details. Wishing you a good day ahead and looking forward to have a chat with you rather soon. Well, let's turn our attention to the chemical space. Well, most chemical companies have seen an uptick in stock prices of the last few days. That's been driven by increasing in pricing of key chemicals and expectations that Chinese demand is recovering. To help us analyze what's going on ground, Mr. Rajinder Gogri, the Chairman and Managing Director at Aarti Industries, joins us on the show. Hi, Mr. Gogri. Good morning. Thanks so much for joining in. Well, Mr. Gogri, you tell us, what is your reading? There has been a big surge in chemical prices, but we understand it's not really backed by demand. Is it because input costs have gone up? How do you see this playing out?
Yeah, I think overall demands have now shown increase. So I think from this second quarter onwards, we see the higher volume for most of the discretionary products. And I think agrochemical segment the volumes are now looking up for the sector.
So Mr. Gogri is saying that demand has increased in the month of August itself in comparison to what you saw, say, in the previous month or the previous quarter?
Yeah, overall, I think demand has recovered.
Okay.
August onwards, but different products, there will be a different cycle. But in general, I think overall there is an increase.
Okay. What does that mean, Mr. Gogri? Could you quantify that? To give us some extent, has it improved by 10%, 15%, 20%? When you say it has improved, what's the degree of improvement?
Yeah, it will be range of about 10%, on an average, you can say that, those kind of increase should be there in this quarter.
So demand in Q2 has gone up by about 10% on an average across products?
Yes.
Okay, that's interesting. What about prices? There's been a big surge in chemical prices as well. What is the situation right now compared to what it was, say, a few months ago?
Prices generally, we have a pass-through model. So, all the raw material prices generally pass through. So, I think the volumes are more critical for us in general.
Okay. So if prices are a pass-through and volumes are more critical, can you tell us what is the kind of, since demand has picked up, what is the kind of growth that you are looking at in FY24 compared to what you've seen in FY23? Both on the volume and top line front?
Yeah, you see, the first quarter was, quite impacted for entire chemical industry in general, not only in India and globally. So we had a degrowth of almost 30% YOY in the Q1. So we see that, Q2 onwards, positive growth over Q1. And overall, I think this year, we'll see that try to hit the previous year number.
Okay.
As far as EBITDA is concerned.
Okay, so top line will be more or less flattish at around 6,600 crores odd.
Yeah, top line is more function of the raw material prices.
Got it. What about the EBITDA number, Mr. Gogri? For the next year, that's for 2025, you're looking at taking the EBITDA number to around 1,700 crores. But in FY24, what will it likely to be?
Yeah, FY24 still, how the entire this demand growth curve moves up in second, third, fourth quarter. So that will be the determining factor. So more or less, we'll try to be more flattish on that. Substantial growth should come up in FY25.
Okay, and what is the margin band we should look at then? The first quarter you've done margins of close to around 14% or 14.2%. You expect margins to improve from here on?
Yeah, I think margin as a percentage generally, again, based on raw material prices. So we generally don't track much on the margin front overall.
Okay. Got it. Mr. Gogri, sorry, just to rewind, you said Q2 volumes should be better than Q1, and that 10% increase in volumes that you've, the average increase, that's Q2 volume should be about 10% higher, Y on Y, right? That's the way to look at it?
Yeah, QOQ, it will be more of over a Q1 number.
Okay, so Q2 volume should be about 10% higher, Q on Q.
Yes.
Okay, okay. Just a quick word on the discretionary segment, which is about, I think, 50% of your overall revenues. Could you, and you started by saying that you're seeing some better demand for those products. Can you give us some more color? Do you expect it to hold? What has led to this increase in demand revival? Any specific one-off factors or anything of that sort? Or is this going to be on a repair kind of trajectory? Will get better and better? Go on.
So basically, this was mainly some demand slowdown as well as inventory correction because of the global interest rate increase. And previous year, there was some accumulation of inventory, so which correction is taking place. So once the inventory correction from product to product gets over, we are seeing the growth in this demand for discretionary products.
How, when will this inventory complete rundown happen? I mean, your best estimate?
I think by Q4 we should be near normal by Q4 for most of the products.
Okay, and this is a global kind of a sort of view, right? I mean, it's global increase has been high. So
it's a
March
global
of 20. Sorry, go on.
Because we have direct and indirect also export, like some of our product are then subsequently exported. So this is a global inventory correction mainly because of the US interest rate. Interest rate in dollar terms have increased.
Okay. I wanted to talk a little bit about the balance sheet as well. You're sitting on around 2,600 crores of debt. Do you have any plans to bring it down?
No, we are continuing with our investments about 2,500 to 3,000 crores in FY24 and 25. So we'll see some increase in debt further, and then afterwards, I think it will start flattening and coming down.
So how much will your debt go up by, say, in the next 12 to 18 months?
Yeah, it will be upward of 3,000.
Upward of 3,000 crores. Okay. You have some capex as well, right, in some of the new products and the existing products as well. Can you tell us what is the total capex plan over the next 12 months?
Yeah, this FY24 and 25 combined around 2,500 to 3,000 crore is the capex. What we are
okay.
All right. Mr. Gogri, what was about your capacity utilization level? I think it was much lower in Q1. If things have improved, what are you functioning at currently, and do you see that improving?
Yeah, well, as I mentioned, about 10% in overall volume increase, and I think...
But, as a percentage, utilization levels, in comparison to what you can normally do?
Actually, we have been adding capacity. Our nitrochlorobenzene capacity also expanded in month of July. So it will be difficult to give a specific percentage because we have a very wide product range.
Okay. Got it. Sir, just one last question. What Sonia said about capex, and you gave us that number over FY24-25. No reconsideration, right? All of this is committed kind of capex, and this is in a way already work in progress.
Yes, because the long-term, India story is we are very confident that there is a demand appetite from India. And a lot of these products are both import substitute as well as for export market, and they are growing in both agro and pharma. So we are very confident as far as the long-term demand from India.
Okay, this inventory build-up and then slow correction of those inventories, drawdown of those inventories, you would have seen in earlier years as well. Right now, you're telling us that it should be normal, inventory across the board should be normal by fourth quarter, by the end of the fourth quarter. What happens after that when inventory is normalized? I mean, what have you seen in previous cycles, sir?
So then, it will be more from the end consumer demand, so that will be of reach to that level, like agrochemicals should more or less become normal. And on discretionary also, I think the end consumer demand also should get more or less normalized. I think US interest rate also should peak in this financial year. The interest rate also maybe should start tapering off in FY25. So I think FY25 should become more or less normal.
Okay. Just one final question from my end. This Dicamba product, there was some contract cancellation that you went through, so that became a bit troublesome for the company. But can you tell us what is the outlook now? How much money have you put into this already? And what are the strategies to revive this plant?
Actually, that product demand is still an issue. So we are just looking at next couple of quarters. We'll see how much we'll be able to utilize that plant, or we should repurpose that plant for something else. So that is under evaluation right now.
Well, what about the deficit in monsoon out here? Isn't it going to hurt you?
Actually, most of our agrochemical segment is more for global markets. So Indian monsoon is not going to be much impact for us.
Okay, great. Thanks for clearing the air, sir, on that. And good to hear that at least demand is improving. We were wondering whether or not, we had an IFL analyst who told us that maybe demand is not that strong. We'll have to wait for clarity on that. But as per you, as you're telling us, that if volumes have improved by 10% on a quarter-to-quarter basis, that's definitely good news. Thanks so much, Mr. Gogri, for stopping by and giving us all of those details. Well, time to slip into a short break. On the other side, we'll be joined by Vivek Lohia, the MD of Jupiter Wagons, to discuss the company's business outlook, as well as they have some fundraising plans. Later on, we'll connect with Lalit Agarwal, the founder and managing director at V-Mart Retail. Stay with us.
Welcome back to Bazaar Morning Call. Very interesting company now on our radar, Jupiter Wagons. If you just pull up the stock, just look at the phenomenal move the stock has seen. This year itself, the stock has jumped over 270%. And is the stock performance led by a financial performance, or is there something else? The company also plans to raise equity funds. To understand more about the business prospects and the need for additional funds, we're joined by Vivek Lohia, the MD at Jupiter Wagons Group. Vivek, thanks a lot for joining in. And I'm sure you are as perplexed as investors to see the kind of move that the stock has seen in the recent past. So I just want to understand from you, in the last 2 to 3 years, has there been any change in your business drastically that has led to this kind of an up move? And what are the businesses that you are in currently? How do you compare yourself with peers like, say, a Titagar or a Texmaco?
Yeah, good morning. So definitely, this sector has been going through a huge tailwind, and we had seen it coming. So since this government has come to power, they were very focused on this sector, especially given the high logistics costs which the country currently has. We are typically, our logistics cost is close to 13%. And if we are going to be competitive globally, we need to bring it down considerably. And railway being the key driver, I think, towards this. So we were seeing a lot of investments in this sector, which was not visible, obviously, in the public domain. And which recently, you're now seeing the I would say, the offshoots of that. So we are a wagon manufacturing company, and wagon procurement is the last mile of the whole chain. So initially you have to set up the infrastructure, which I think the government has been doing a phenomenal job.
Got it. So can you put some numbers to this for us? The last time, the last I checked, you had an order of, you won orders of over 2,100 freight wagons worth 1,060 crores in Q1. What does it take your total order book to? And how much will you be executing, say, in the next 12 to 18 months?
So currently our order book is about 6,000 crores plus. So in terms of order books, we don't see any challenges because we are constantly adding new order books, both on the private sector itself, and now government has, what we can understand, has got big plans to procure further rolling stock. Anything between 40 to 55,000 is a number which we are aware of, and which is going to happen very shortly. So there is a lot of opportunity in this sector, and the private demand is also very strong. In terms of execution, currently we are doing about close to 600 wagons a month, and our target is by end of this year we are increasing our capacity to about 800, and we are doing substantial capex towards that, both on the wagon manufacturing as well as on the backward side of it. In terms of our foundry capacity, we are looking now on seriously to set up a wheel manufacturing facility with one of our global partners. So the idea is that by next year we should be in a position to manufacture about close to 1,000 wagons a month.
Okay, all right. Hi, Vivek. Big stock move is what you have seen, but that's what makes things even more interesting, right? Maybe the street knows something that we don't. So let's get some more clarity. You said your order book is around 6,000 crores. Break it up for us. How much of it is private? How much of it is from the Indian Railways?
So currently, most of our order book is private. I would say about close to 6% plus of the order book is private.
60%?
Over the last
60%.
1 year, that has been our focus, because we saw a lot of opportunity in this space. Earlier, the private participation was much less, which is now growing considerably. And we are the front runners, I would say, in the private space.
Got it. All right. Let's get a few more details. You want to raise some money, right? Why do you want to do that? What's the quantum you're looking at? And could you tell us what is the need to raise money as of now? Because I'm looking at your interest payment is what, some 30 crores in the full financial year. So why do you require it?
Yeah. So as a company, we are a net debt-free company. So again, but then as I've told you, there's a lot of opportunity in the sector, and it's not that one is our core wagon manufacturing. Otherwise, we are also involved. We also have invested a lot in manufacturing of the brake systems, both for wagons as well as for coaches. We have very good global partners, companies like Daku.
So Vivek, sorry to come in. So you're going to be raising money for the capex plans that you have. So could you tell us how much of money are you looking to raise? Point number one, and what is the ballpark capex plan that you have? We get both those two numbers.
Okay. So we are looking to raise anything close to between 500 to 600 crores. That's what our target is. And our capex ballpark plan over the next year or 2 years is about close to 1,000 odd crores of new capex, which we are planning to do over the various verticals which we have. We have about 7-8 verticals. So spread across the vertical is about 1,000 crores of new capex which we have planned.
Right. Got that, Vivek. So yeah, all these the wagon business is the core business for you. You've got this JV. I think you've got 2 JVs. For brake systems and railway crossings. Then you've got, I think, a tie-up with RITES on the export front. You have some EV plants in the light commercial vehicle segment. So there are too many things. So which is will wagons be the predominant business for you, or in a way, do you have the right to win in any of the other segments as well? Just wanted to understand.
So yeah, so currently wagon definitely will be the predominant business, but I think going forward over the next year or 2 years, you will see the brake business being a critical driver to the growth. I think next year we should be doing a business of close to 1,000 odd crores on a break side of our business. And there, as I've been consistently saying that because it's a more technology-oriented business, so the margins are also better. So that impact you will see on the core business also. Plus, I think EV is something which we are very excited about. We are launching our first commercial vehicle by beginning of next year. There we see a very good opportunity. Our focus is again on the last mile and the middle mile. So initially we are launching a vehicle with a 1-ton payload, and we want to take it up to all the way up to a 5-ton payload vehicle.
Okay, just a couple of questions. You know, there are some concerns that investors have, and I'll address, I would like you to address it one by one. The promoter holding has come down. Earlier, I think in March, it was about 75%. Now it's come down to about 72.3%. What is the rationale behind it, and any further dilution in store?
So I think 72% itself is a very healthy promoter holding. So till about 2 years back, most of the growth happened organically through the cash flows which the company has. But now we see a lot of opportunity in the sector, and there's a lot of tailwind. And the government is also very focused on this sector. So we want to encash on that opportunity. So
you're not looking to bring it down anytime any further, right? I mean, it will stand at this level?
No, because in the current round of fundraising which we are going to do, there will be some dilution, but it will not be very substantial. But post that, I don't think, I wouldn't know the exact number, but it will be, I think, close to about 3 to 4% maximum.
Vivek,
beyond that,
yeah. So basically, you're happy with your holding coming down maximum to around 68 to 69%. It won't fall below that.
Yeah. I don't think anything. It will go. Around 68% is what we are looking at. Below that, I don't think.
Vivek,
and if you look at our peers in the sector, our promoter holding is much healthier than that.
Vivek, during this conversation, numerous times you mentioned what a big opportunity is. That's why Sonia asked you, why did you even sell that 2%? A promoter would like to hold a larger chunk, right? But we get that rationale. Maybe taking some money off the table, there is going to be some dilution. So 68% we're okay with. But you also mentioned
because see, the whole idea is to grow the pie. So it's when there's a
we take your clarification. We take your clarification, Vivek. But what else has come to notice is your revenues has gone up very, very well. EBITDA number as well has gone up. But what the street tracks is cash flows from operations. That's not gone up proportionately. Are there plans to improve that from year on? Because that's a key matrix that we look at.
So, honestly, see, again, our business is a very cash flow generating business. So, but when the revenues go up substantially, what happens is that, you get, there's a lot of commitment towards the working capital. And that's what we are seeing because we have been adding, quarter on quarter, we have been adding substantial order books. So I think that will continue for in the next 2-3 quarters. But slowly now you will see that, the cash flows are definitely improving. And I would say our cash flows are pretty healthy because our inventory levels, our debtor levels are less than 1 month, and our inventory is also not, it's about a 3 to 4 month kind of an inventory cycle which we maintain.
But Vivek, your net debt has also gone up. I mean, if you map the last 4 years, right, there has been a substantial rise in debt as well. Is there more in store?
So, if you look at the debt numbers, there's no long-term debt. So, we are a long-term debt-free company. It's mainly towards working capital. And I think it's commensurate with if you see the revenue growth and if you look at the debt comparatively, again, the growth rate in the debt is much lower than the revenue numbers, the pace at which we are growing. And, and that is again due to the strong cash flows which we generate in the business.
Vivek, let's wrap this up on a more growth aspect. So what are you said the brakes business will start to do well. It will generate 1,000 crores of revenues. You said next year, right? FY25.
Yes, that's what we are looking at.
So what is what kind of numbers are you will you look at? I think you did about almost 2,100 crores on top line in FY23. What will be the number for F5? Let's talk about FY25. I mean, ballpark, given everything you're doing. Yeah.
So honestly, we generally don't give any forward-looking numbers. But as I've told you last year, if you look at the 2100 revenue numbers, there on an average we supplied about close to 450 odd rail cars, which again, as I've told you, our target is to go to about close to 700 odd numbers. Again, we are adding new revenues from our brake business. Our other businesses also, the container business which we are in, that is also showing a lot of healthy growth. We are
can the number? So then can I mean, again, ballpark? I mean, if you can help us, Vivek, what are we looking at? At least a doubling?
Yeah, so something in those lines, definitely something in those lines is what we are targeting.
So at least a doubling of revenues by FY25. Because then you said that margins in the brake business are better than the regular. So there should be some improvement. Got that.
Vivek, just one more question. Your revenues are going to move up. The cash flows, as you promised, that's going to move up as well. Just a final couple of questions from my end. Normally investors like when the management, as their performance improves, they give out dividend as well. Last year, you gave out a small dividend. Will you all be putting a dividend policy in place? Point number one. And since you're looking to raise 500 to 600 crores, who are you going to give that money to? Do you have investor interest?
We have just announced our plans to raise money. So that is a work in progress in terms of, we do have a lot of investor interest, which is there. So, but as I've told you, we've just announced, so we will work towards that. In terms of dividend, definitely the idea is that we are going to be very consistent with it. And we are definitely working on something like that. So ultimately, our whole idea is that we need to continuously reward our shareholders who have been with the company.
Sure. All right. Well, thanks a lot for addressing all the concerns that investors had, as well as the potential, growth in the business. Appreciate your time here on CNBC TV18. Well, the TV18 editorial team does not engage in speculative or active trading in stock markets and follows its code of conduct on securities trading and investment. Any investor, viewer is advised to carry out your own necessary diligence or through a certified registered financial advisor for any investment decisions that you would have to make. But let's get back to the markets now and talk about what's happening on the index. The mid-cap index is actually doing better than the frontliners, as has been the case for a while. Mitesh Thakkar is joining in now to help us with some trades. Mitesh, what is looking good on the charts right now? And what about the headline index? How's that looking?
I think the headline index, is being contracting, so you will get this volatile dips and rallies. But I think 19,450, I think a lot of people have watched that level as an important pivot. I think that could be the target for the day or two. And we should be slightly mildly positively biased given the fact that the Bank Nifty is showing good traction on the intraday chart. So I think if the Bank Nifty manages to get past 44,450, expect 44,800 to about 45,000 on the Bank Nifty as well. So I think it will be mildly positively biased. On the stock side, I have one buy and one sell. Atul Limited, that's not the Atul Auto stock, the other one. Atul Limited, that's a buy with a stop below 71.80 for targets of 73.50. And the oil refining companies is something, which I've been slightly negative about. We had a sell on IOC earlier. HPCL is now breaking down. So that's a sell with a stop at 260 for targets of 244.
Okay. All right. Mitesh, thanks very much. Great speaking with you, and we'll have you back soon again. Well, let's just take a quick look at the market. We've got, 40 points on the index, 19,384 where we stand. V-Mart Retail is the next company that we are talking about. The stock is down over 30% from its 52-week high. To discuss the demand environment, how it is impacting competition, impacted by rising competition, we have Mr. Lalit Agarwal, founder and managing director at V-Mart Retail, joining in now. Sir, the conversation, Mr. Agarwal, good morning, Prashant here, that's not changed because some of the factors are still there, right? Top of mind is competition from players like Reliance. But it's not just Reliance now. Tatas have gotten into the low-value fashion kind of segment in a large way. At least there are large plans. So that is one. I want you to sort of talk about that. Has that intensified? There are other players, more players getting into your segment as well. So let's just start with that. And then I want to talk about the underlying kind of demand conditions. Monsoon has been deficient in many parts of the countries. I don't know, in areas that you operate in, the big markets for you in the north, are those kind of also seeing that, and what is the impact of that? Go on, sir.
Good morning. Certainly, India is promising, Bharat is promising. So people are getting aware that the consumption is bound to increase. People are more aspirational. People want to consume. So more and more retailers and more products are getting lined up for the consumers of Bharat, and that's something which should have happened, and it is happening now. So I think this is a good news, and it's good news because the market is such a large market, and there's so much to do, and everyone can come in with their kind of proposition, and because there are so many personas that the customers have, and with different personas you need different kind of value, because value is something which is the most important. Most of the global companies in the world are largely value driven companies and value fashion companies. So I think value fashion is something which is definitely bound to do very well in India. And that is what is being seen by a lot of other industries and retailers and conglomerates. And which is getting accepted, whether it is Reliance or Tata, and they're finding it very interesting. They have taken up a particular niche segment, especially Tata has got into a new format, which is bringing in a new, what I call urban youth mindset people who want to consume a particular kind of product lines at value, and that's what is happening. So I think the marketing is becoming very, very interesting in value fashion space. And that is definitely making more excitement and creating more consumption, because normally fashion is viral, and then more and more people consume fashion, more and more people want to buy more fashion and look pretty better. So I think that's happening, and I know these are difficult times in the market where you have more store coming in, more players walking in. At times, it takes little bit of time to increase the consumer base. But there is also a large transition which is happening from the mom and pop and unorganized to also organized, which is also being seen. So I think largely we believe the market is going to become better. There are a lot of players who are going to experiment and try and expand a little more aggressively. We'll see a lot of things happening, and we have seen a lot of things which has happened in the past 1 decade. So I think it is definitely going to be better. Market has been quite okay. Monsoon is definitely a very, very important fundamental for the consumption, especially rural consumption, we say. And largely our rural consumptions are dependent upon monsoon and agri income. So
Got it.
There is definitely a bad news or not a very good news in these 2 months or 1.5 months.
Mr. Agarwal, got it. I understood the demand situation is not as bad as perhaps what it was earlier. But just wanted to quickly address the Aeroflex listing. It just happened, I think, a while back, and it's not a great listing. I mean, 65% higher. On day one, I think it's listed at about 176 rupees, now 180 rupees on Aeroflex, and that's a strong listing that we've seen. It's into, manufacturing of braided hoses, solar hoses, basically hoses, vacuum hoses, etc. So, and the company has spoken about very strong growth that they're looking at. It's metallic, flexible, products that they're looking at in terms of manufacturing. So, good opening for that particular counter. But Mr. Agarwal, I agree the demand has picked up, but can you give us the exact number on what the same-store sales growth would look like? Because in the quarter gone by, the growth was not that great. And, for the full year, what are you looking at, FY24?
So we are expecting some growth to come in this particular year from a like-for-like level. And then we will see some growth. But as of now, in this first half, it has been a little dull and a little more flattish kind of approach. But yeah, in the second half, because largely the festivals are getting shifted to the third quarter largely, and we will see a very good quarter three, and that's what we are expecting. And I think even the consumption is going to bounce back. So we'll see some positive low single-digit like-for-like same-store sales growth.
Okay, low single-digit growth for the full year is what you're saying?
Yeah.
Okay, so low single-digit same-store sales growth. Got that. Can you give us an outlook on your margins as well? There's been a steep fall in margins. Is it because of competition, pricing pressure? I think you're sitting on almost 13% margins now, and you used to enjoy 20% margins earlier. Is there more margin pressure that you're looking at? And if yes, what could the ballpark range be?
No, I think we are very comfortable on the margin. That's the margin that we focus on. Largely, our margin also getting impacted because of our two acquisitions that we did, an Unlimited acquisition in Southern India, which is not giving the similar margin, and then the online acquisition of LimeRoad, where we have to invest money and which is not creating positive EBITDA right now. So there is a little bit of pressure on those front, but on the main VMart business, I think we are getting a good margin, and there will be some pressure because the cost of the raw material had gone up. It has not gone down too much, but the consumers don't want to pay too high, and because of the competition as well, you need to keep your prices very sharp. So there will be some pressure on the margin, but I can't give you a forward figure on the margin. But yeah, we'll be averaging as per the last year.
Got it. Mr. Agarwal, when we speak with investors, and there are some marquee investors in your company, the general sentiment is it's a great company, very well run, but finds itself in a tough kind of operating environment it has for the last couple of years. Will you have to do something different? I mean, innovate or do something different, or you think, I mean, one investor should get used to these kind of growth rates?
No, I think we should expect, and definitely our economy also and our consumption also has got impact apart from the competition which has come in. So I think these are transition moments, and these are also transitioning moment for our Indian economy from informal economy to a formal economy. So there's a lot of loss. I mean, customers are getting into also a swing, and our self-employed people are also getting into a different kind of income environment. So there's a lot of change happening in the Indian economy, and plus I think this is definitely going to come back, and the consumption is going to grow. We are going to grow by almost 15-16% in this particular year at a total level. So we are not looking at a low growth. We definitely want to increase it further, but yeah, it will take some time because of the economic situation. But I don't think the investors should be worried, or the ground is not good. The consumption, the kind of 5 trillion economy that our Prime Minister is speaking of, we are anticipating a very good consumption growth, which is going to come in. And as soon as the GDP or the per capita income grows for the consumer of our segment, it is definitely going to lead into more consumption of fashion.
Got it. We'll leave it there, Mr. Agarwal. Good luck, and it's always great hearing from you, sir. Appreciate it very much here on CNBC TV18. Well, that's VMart, which is up about 1.33%. The market, by the way, is up about 26 points. 19,373 is where we are. I was highlighting Supreme Industries when we started, and I was it was up 5%. It's flat now. It's about 0.25%, so absolutely unchanged. From getting to almost 4,700, it's climbed back to about little over 4,400. Just wanted to highlight that. We'll take a quick commercial break here. We focus on commodities with Manisha, who comes up next. Stay with us.
Okay, welcome back. Sources have told CNBC-TV18 that SEBI is in an advanced stage of investigation in the Axis Bank Max Life deal, and SEBI is also examining valuation discrepancy in the transactions. Yash joins in with more details on all of this. Yash, what are you picking up?
Well, Sonia, the transaction that you spoke about, under that Axis Bank, picks up about 19% stake in Max Life Insurance. When the first tranche of this transaction was executed, that was about 12.99%. IRDAI, which is the insurance regulator, had penalized both entities for two things. One is for a discrepancy in the pricing of the deal, and the second one was with respect to entities making undue gains out of this particular transaction. What we've been given to understand is that market regulator SEBI is also investigating in the matter. In fact, SEBI is at a very advanced stage of its investigation when it comes to this particular transaction. The action from market regulator SEBI is expected to soon. This is what we've been given to understand from our sources. And the charges that market regulator SEBI is looking into is of course, loss to public shareholders because of the valuation deficit which was arrived at for the first tranche of the transaction. SEBI believes that there could be a loss of shareholder value through this particular transaction which happened. And the second part is about the valuation differential or the valuation discrepancy itself. Now, just to help you understand what exactly is this discrepancy in the valuation, the first 12% of the transaction where Axis Bank acquired that stake in Max Life was done at an average of about 32 rupees per share. After the penalty which came from the insurance regulator, the next tranche, which was about 6%, for that the pricing was revised to about 113 rupees per share. Now, if one is to assume that 113 is the fair market value, then as per that, in the first tranche of the transaction, there was a loss of shareholder value to the tune of about 1800 crore, which was derived from this particular transaction. Market regulator SEBI is investigating exactly that, where we've been given to understand that there could be some action from SEBI. We've written to all three parties involved in this particular transaction, Axis Bank, Max Life, as well as the investigating agency, that is SEBI in this particular case. We are still awaiting a response from all these three entities.
All right. Yash, thank you very much for that. Just to clarify, that number, 1,800 crores, that is as per CNBC-TV18 calculation, and that is not something which we've learned from sources or from, any of the other parties. That is a simple calculation which Yash has done with regards to the difference at which the first tranche was done at, which was 32 rupees, and the next one, which was over 130 rupees per share. All right, let's talk about commodities now. Manisha is standing by with what is top of mind. Manisha, morning.
Thank you for that, Prashant. Well, almost every segment in commodities seem to be doing quite well. It is about the international market. So you have precious metals, industrial metals, energy markets, all trading in the positive. But I'm focusing on the industrial metals because we've seen 1 to 3% of gains in the overnight markets across sector, whether it has been ferrous or non-ferrous metals. The markets are looking at stronger demand going forward because September to October are traditionally strong demand months in China and much of Asia. So the demand is expected to pick up. We already have seen the discounts turn into premiums for some of these commodities, and that has been supportive. It also is about the weak US economic data that has supported a no rate hike picture. So that is what the street is reacting to. And then from China as well, while we have seen weak economic data continue, but China has been putting out measures, small even and far and few, but even then it has been coming in. Now the PMI has contracted for the month of August, but it is better than the previous month and it is better than the street expectation, and that in turn also seems to be supporting many of these commodities. When you look at the Chinese yuan as well, it has rebounded. The euro is trading at a 2-week highs. So we have seen the dollar decline. Many of these other high-yielding currencies do well, and that has supported. Steel is trading at a 3-week highs right now. You have iron ore prices trading at a 1-month highs. And when you look at the non-ferrous metals, we have seen similar gains come in here as well, where copper is trading at a 2-week highs, aluminum at a week highs as well. The street will now be watching out for the US non-farm payroll data that comes in on Friday, and that would give you further direction.
Manisha, thanks a lot for that. Let's slip into a quick break. On the other side, our special segment, It's the Economy. Lata will connect with Upasana Bharadwaj, the Chief Economist at Kotak Mahindra Bank, and Kaushik Das, the Chief Economist at Deutsche Bank, to discuss the key expectations from the first quarter GDP numbers, which will be announced today. Stay tuned.